Can you describe what do you do in a few words? Like, I met you first time, so please tell me.
Myself or what Manta does?
I mean, what do you do as a co-founder? I think maybe about the project.
Sure.
First. We'll talk about yourself
Yeah.
a little bit later.
So Manta, we are the first and largest modular L2. We actually have been building for the past 4 years with a team of around 55 people all across the world. We are one of the most active L2s in the space right now as well. I think we're probably in the top 3, top 4 with about 1 million transactions per day going across these 200 different ecosystem applications. And our focus is purely on user experience, what can drive up scalability, what can increase security, what can reduce costs. And we've been making a lot of strides on that front, and happy to chat more about that.
I get it. Can you explain me what does it mean modular?
Yeah, so that's a really good question. So let me take a step back. If you look at the history of Bitcoin and cryptocurrency, right? Like back in 2011, you have Bitcoin and all these forks emerging from Bitcoin, like Bytecoin and Digibyte and Ravencoin, and in the future more like, Bitcoin Cash and stuff. All these teams take this existing technology and they say, we're going to make it better. And they do it all in-house by themselves. And they build everything from scratch, apart from obviously forking Bitcoin, but everything else from scratch, right? But then when you fast forward to 2024, none of them are really as relevant as Bitcoin anymore, right? In fact, many of them are irrelevant, period. And so these teams, they weren't able to adapt. They built everything in-house. They weren't able to adapt to the changing needs of the users, right? Same thing with Ethereum. Ethereum comes out, and then you see forks of Ethereum and competitors to Ethereum, EOS, Neo, Qtum, all these other things. Everyone's building everything in-house. And they're saying, we're going to be better than Ethereum. But fast forward to now, many of them have fallen out of relevance, right? And so now in 2024, we have a same exact issue, but with layer 2s, right? There's like probably 100 different layer 2s that you and I can collectively name together. And will all of them still be around in 5 years, 10 years? I don't think so. Yeah, exactly. We agree on that. And so what we're seeing is this recurring pattern of people building all their core technologies in-house, being very slow to adapt, and not being able to address the changing needs of users. And as a result, they fall out of relevance. Instead of building everything in-house, now we're in a space, we've evolved to a point where we can take advantage the technologies that other services are building out. And that's exactly what modularity does. So instead of building everything in-house, we say, oh, this team has an amazing data availability service that we can take advantage of today. This team has an amazing ZK prover network that we can take advantage of today. And we can integrate that into our network so that we can continue to provide value on an ongoing basis to our users. 3 years from now, when there's a new product, a new service, a new technology out, if that provides value to the users, we can take advantage of that, plug it into the network, and give it directly to the users as value add to them and their experience on Manta. And I think that modularity is future-proofing the infrastructure development and allowing teams to compete through agility and adaptability rather than just building something that's cool today but may not be cool in 5 years. So that's how I see sort of what modularity is and the advantages that it brings.
I get it. Can you share me a little bit more about the numbers, maybe the number of the transactions or the users? What is your main metric of the success?
Sure. I mean, it's funny because when you ask different layer 2s, the metrics that they use to measure are very different as well, right? And I think that tells you that no one knows. But, right, like I think that, the true standard of success, I think, are real users doing real things on a network, right? I do think that right now in the Web3 space, we're a little bit absent of that because I don't believe that there are enough users to saturate the entire ecosystem right now, which is why block space is so abundant. But at the same time, right, like there are metrics, there are numbers that we use to tell us if we're potentially going in the right direction. But of course, those numbers need to be scrutinized very heavily. So one metric that we use is just looking at on-chain activity, right? And so, for example, for us right now, we get about 1 million transactions on average per day. And that lands us into one of the top 3 L2s in terms of transactions. If you scrutinize those numbers, right? Like the question here is, okay, how many of those are real users? How many of those are sustainable users? How many of those are airdrop farmers? How many of those are pure bots and all that stuff, right? And so I do think like using like pure metrics is a little bit misleading because there's just not enough users right now. And I think like that's symptom of a bigger problem. But in terms of, like our own sort of metrics that I truly am proud of, we were the first to go modular. We're the first modular L2. We're still the largest modular general L2. We started using Celestia for their data availability services pretty much as soon as they went mainnet. And in the first month of using Celestia, we were able to save our users $2 million in gas fees, which translates to roughly about like $20 million per year, right? In gas fees alone. And so I think that was a huge breakthrough for the industry because it's telling people, hey, if you take this modular approach, like all these benefits that you can give users, it's not just ephemeral. It's not just something as abstract as, oh, it's decentralized, right? But like this is a dollar value that users are saving on our network because we've started using modularity. And so I think like those types of metrics are extremely important because they translate into end user value. Just some of the things we look at.
Can you make any other example where real users make real things on Manta Network?
Yeah, sure. I mean, it's really hard to say, right? Like I personally have not analyzed every single transaction on Manta. Well, one, there are a lot of real users, right? Because, for example, one, we have identity proofs on the network that can verify that you've been KYC'd through exchanges already, for example. And so using that as a proxy, we can kind of get a gauge, which users are real users, which users are bots. And then on top of that, right, like we have a lot of partnerships with, well, recently one with Bonk. And Bonk has its own very active staking program with their community. And those stakers are majority real users as well. And they're also coming onto the Manta ecosystem. And so I think through those sort of proxies, we can estimate, right, like where the real users are, who the real users are. And then we can look at what they're doing, which is a lot of exploration into on-chain gaming. Also airdrop farming, staking, LRTs, LSTs are very popular. Yeah, so a lot of those types of activities. But at the same time, right, like the reality is bots are kind of doing the same thing. Bots are also airdrop farming.
I get it now. I just opened your website on a page like Manta Ecosystem. And there is so many projects here doing so many things. So I want to ask you, how do all these guys come to idea, hey, we need to work with Manta? Personally, I'm not a developer. I don't try to solve all these blockchain problems. And I want to understand how users choose you from all the other solutions. It's not what makes you different, but how do they come up to the idea that, hey, we need to try with these guys?
That's a really good question. And I think that also kind of goes into one of the fallacies, problems of layer twos. Because when you look at different layer twos, right, we tend to, or at least historically, right, I think Manta does it a little differently, but we tend to compete on technology. We tend to compete on decentralization and, verification and decentralizing the provers and all this other stuff. I don't believe that applications really care about. Because if that was true, then applications wouldn't be deploying on every single ecosystem, right? Like applications care about growth, they care about users, they care about daily activities. And so that's where I think Manta does things very differently. So our whole pitch to our partners is not, hey, we'll help you become more decentralized, be more secure. I mean, to be honest, all the L2s have basically the same offering here. We help these projects grow. And I would be lying if I said those projects that you're seeing on the ecosystem page are all exclusive to us. They're not. They are in other ecosystems. But I think one of the key differences for us is that we bring in our team and we try to make sure that we grow your success alongside you. And I can give many examples of this. One of the founders that I've actually met at one of the conferences has told me that he's never been in a chat with another L2 where the L2 has more team members in that chat than he does. So we bring more of our team members to help support than some of these teams themselves. And that success is highly demonstrated through some of our success stories. So ZeroLend is a lending protocol that started off on ZK Sync. On ZK Sync, they were, I don't know if they still are, but they were the largest lending protocol. And I think collectively they had about 15 million in TVL over their whole entire lifetime of being on ZK Sync. And they came to Manta and they wanted to work with us. And when we brought them to market with us, within the first 24 hours, we got the same level of TVL for them. And so I think that's a testament to how hard our team works to make sure that these projects that are working with us and putting their bets on us, right, we're also putting our bets on them and helping them succeed.
How does it work? I mean, why all this community, all these people, all these developers, why do they follow you? Because in your example, if you can put the other solution on your platform, then let's say spread it to your audience. Hey, wow, this is a good idea, we will support it. You cannot build it in one day. It looks like it was a long way building this community or something like this. Why do they trust you so much?
It's a good question, right? I don't think that this happened overnight. There are many different factors, many different variables that come into building this trust. I think one of the key variables is the fact that we've been building for the past 4 years, and we've gone through ups and downs. It's been a crazy journey throughout the entire time. But I think a lot of builders in this space, a lot of projects in this space see what we've done, see where we've come from, and they do respect that. Right. And so they're willing to give us a chance. And that chance turns into case studies because they've been proven successful. And then we can use those to build even more momentum. And that's exactly what we've done.
What was your hardest decision as a co-founder during these 4 years?
Oh, my God. So many hard decisions. I feel like every single week there's a hard decision.
Maybe some of the top, some of the hardest. Because entrepreneurship is about the decision making. Because me personally, I'm not a blogger. I do all this blog as a hobby. So they started as a hobby and this is continued as a hobby. And I also have around 70 people in the different teams. And I know how hard it's sometimes to solve all of these problems.
For myself personally, I think it's very hard for me as an individual to let go of people. And this comes in the form of team members. This comes in the form of partnerships, because I see a lot of potential in everything and everyone. And so I feel like there's always opportunity, but it may not necessarily always be the case. And if you hold on to that sort of thinking, then it can be impacted negatively on the project. Because when we started Manta, we're actually fully focused on just building out ZK for on-chain cryptography. And so our initial team was all just cryptographers. And we were in the Polkadot ecosystem. And then one day we had to make the hard decision to pivot also into becoming an Ethereum L2, because the reality is there weren't enough users in the Polkadot ecosystem. There still aren't enough users in the Polkadot ecosystem. And so despite how much we build, if no one uses it, does that mean that we've built something successful? Have we served a purpose? And I think the answer to that is no. Personally, I love the Polkadot ecosystem. I love the people there. I love the relationships I've built, right? And it was truly a hard decision to, leave that ecosystem in order to focus on a new one, because you don't want to leave your friends, right? And so any sort of decision when it comes to impacting relationships is always very hard for me.
I get it. I agree with you. This is so hard. What about the finances? I want to ask. Anyway, if you don't want to answer any question, you cannot answer. It's okay. I want to understand how all these L2 solutions, based on your example, let's say Manta Network, generate revenue. Because it's, or you are 100% venture back and you just burn money. How does it work from the business side?
The way that this works is L2s, right? Traditionally, the business model is collecting the fees on every single transaction. And a portion of those fees go to the validators, rewarded inflation on the token as well, whatever it may be. And then a portion of it is collected as profit. And this is a very similar model. But one sort of major advantage here is because we're using modular data availability, what that allows us to do is significantly decreases the cost of every single transaction, which means that we can simultaneously reduce the overall cost for the user. Like I said, we saved $2 million for them in the first month, while also increasing the profit margin for the network. I guess to be concrete about this, let's say, for example, a gas fee, right, traditionally costs, I don't know, like on Ethereum, maybe like a transaction right now is like 50 cents. And so how much can you really profit off of something on top of 50 cents? So maybe you charge like an additional penny or 2 pennies or something, and you get like 2 pennies of profit, and the rest goes out to, whatever it may be, just funny math, no quoting me here. So, but if you're able to now reduce that cost to a penny, you can still charge 9 cents, and the cost would still be 5 times lower than originally. So now you get 9 cents in profit versus originally 1 cent or 2 cents in profit, and the user has lower fees, right? This is obviously just back of the napkin math, but the idea is you're now able to simultaneously reduce the cost for the user while also increasing profit margin and making healthier sort of revenue for the network.
What do you think? Is it crucial for the users, the difference between different L2 solutions in a price? Let's say one solution costs you 5 cents, the other one will cost you 7 cents. Does the price really matters or not?
Yes, it does. But it only matters in a highly contentious environment. So because right now, I'd say we're kind of in starvation mode in Web3 because there's not enough users, right? Then gas fees, especially with like every single day on-chain transactions that people are making, maybe it's not such a significant impact. But when you try to actually scale that out to 1 billion users, that gas fee now becomes a tremendous issue for the average everyday user, especially if you're doing microtransactions such as making some type of interaction on SocialFi, making some type of interaction on GameFi, right? Like maybe if you do 1 or 2 interactions to stake and unstake, it's not a problem. But if you're trying to play a fully on-chain game and every single action that you take costs gas, then those fees add up significantly very quickly.
Why do you think we still not have enough users on a Web3 space?
That's a really philosophical question. I think it's because our incentives are wrong. And this is kind of born out of just what crypto is, right? I think that crypto has always been at the core. The only proven value proposition is alternative finance, global finance. We see that with the birth of Bitcoin, right? Originally, it was more so used to experiment as a transfer of value as well, but now it's more so, I think, largely as a store of value. But there's other sort of, cryptos and alternatives that come out for transfer of value, namely stable coins. And then you see a lot of different projects trying to take shape in this space that pretend to be something else. But at the end of the day, still the core fundamental value is finance, right? That's why it's social fi and not just a social project. That's why it's game fi and not just a game project. And so when you look at these GameFi and SocialFi projects, right? Like the question is, why do users use them? It's not because they are the next generation of social media that's going to overtake X or something else, but it's because people can get airdrops and they can arbitrage on the keys and all this other stuff, right? There's a huge financialized component to this. Same with GameFi, same with, AI and all this other stuff. I don't think the incentives are correct here because no one uses Twitter or X, I guess, or not no one, but very few people compared to the entire population of users use X because they're like, I want to make money. Right? They use X because they want to interact with people. They have fun. They do all these other things. They create meme cultures and all this stuff. And so their incentive to use X is not make money. But in Web3 right now, at the end of the day, I think a lot of the incentives are aligned around that. You're not going to attract the everyday user that just wants to have fun. You're only going to attract the people that are looking at this from a financial perspective.
It's sad, I can say, that we are working in a field where everybody cares about finances at the end of the day.
I mean, finance itself is not a bad thing, right? I mean, finance makes the world go round. But
yeah, sure.
I think the current chapter, and I think part of the reason why we're in this is, again, because Web3 is in starvation mode. I think if you came in as a builder into Web3 and we said, you have an audience of 1 billion people all around the world that are like so ready to use your product. I think builders would be more willing to take risk. They'd be more willing to say, okay, you know what? I'm going to build a revenue model through this rather than a token model through this. And I think that like it's a chicken and egg problem because there's not enough users. App developers don't want to take risks. They just want to fork other applications and do what's been tried and true for other things, which perpetuates this phi cycle, which also means that no new users come in. And so we're kind of stuck in this loop. And I do think, I am optimistic that we'll be breaking out of this loop. But exactly how, I'm not entirely sure at the moment.
What do you think about the latest trend, Telegram mechanics, all these Telegram mini apps solve this problem? They really interact more and more users into the crypto space. Yes, all of them care only about airdrop to get their money, etc. But in general, they made this big step forward to expand more users. How do you plan to interact with all this new audience? Or you don't care about it and you just do your work?
No, I think we definitely care about it. In fact, we have a lot of games building on Manta right now that are also Telegram games. And so we've seen massive success there. Yeah. And actually, I went to Taiwan for Asia Blockchain Summit just a couple of weeks ago, and there were so many Telegram games. And so I do think that it's an ongoing trend.
Also in Asia?
Definitely.
Amazing.
Definitely. Yes. I think originally the wave started more so in Russia, but now it's really catching fire across like China and Taiwan and Hong Kong, Southeast Asia as well. But there are challenges, right? And I think namely 2 challenges come to mind. The first one is there's no doubt that many of these Telegram users, especially the ones interacting with these games, are also bots, right? Like, let's not kid ourselves here. So, it's not like the holy grail and all of a sudden we have 1 billion real users. And then the second thing is conversion. I think that a lot of these real users that are Telegram users that are not in Web3, the conversion rate has not necessarily been proven out yet. And I have a lot of examples of this because I've seen, for example, influencers in the crypto space try to launch projects of their own, right? Not naming any particular projects, but there's many of them, right? Not just like meme coins, but like actual projects that they try to build out. And for whatever reason, right, it doesn't turn out well. And I see that they really struggle with converting their audience into actual on-chain users. And so, I think one of the concerns here is like, will the Telegram audience have the same sort of issues? Or will the users be more adaptable and say, wow, this is fun and the conversion rate is amazing? And I hope the conversion rate is amazing because that's going to be super beneficial to the entire Web3 space. It's just that the history that I've seen in other attempts of converting one audience into another audience, usually these conversion rates are fairly low.
On your website, I found that you mentioned a MMFI, gaming metaverse, on your blockchain. So they will be based on Manta Network?
They'll be deployed on Manta. Yeah.
Oh, why do they choose you?
That's a really good question. I think that it's a combination of many different things, but at the core of it, it goes back to our ability to support teams. I think we do that very differently. It's not just about, hey, deploy on us and good luck, right? It's deploy on us, let's figure out a path to success, and then figure out who can help with what to get to that path.
Can you explain me a little bit in details about how do you support projects?
Yes, it's
maybe with the real examples.
Every single project, I'd say, is different. Right? Or not every single project, but different categories of projects are very different. I think I gave the example of Zero Lend, which was looking for TVL, especially within the first few days, right? And so we focus specifically on that. Some projects want to eventually raise another round. And so they want introductions to investors. They want to hit certain KPIs in order to prove that they're able to scale, right? And so we can help out with that, right? And so it really depends from project to project, what their needs are as well, right? Like how do they define success? And then we kind of create some sort of outline for how we can get there.
Can you tell me a little bit more about yourself? How do you come up to an idea to create this Manta Network? What is your background and how all this happens?
I've always been a technology entrepreneur. I started my first company back in 2011 in the cloud computing space. And so I think you can also say I'm a fairly early adopter in technologies. Back when I started cloud computing, this was also during a time when people said, there's cloud computing's never going to make it because real enterprises, real businesses use bare metal, physical on-prem servers, and only developers who are trying to play with things use cloud. But now we go and we look at the world and we can't find a business that scales that doesn't use cloud, right? And it's really interesting to see that sort of transition. And I see something similar in crypto. And then from there, I built consumer apps as well. Just to test out the waters. Consumer apps didn't really go as well as the cloud computing company. Went to go pursue my master's degree at MIT. Shortly after that, while at MIT, I was working in the AI field. And this is before like AGI and ChatGPT and stuff. But back then, AI was really focused on image recognition and detection. And so I worked a lot on like facial detection, object detection, disease detection. So being able to look at images, X-rays and MRIs and be able to detect diseases such as cancer earlier, more accurately and faster than human doctors could. All throughout this whole journey, I've been in the crypto space. Back in 2013 is when I started mining Bitcoin just to kind of experiment with it using cloud servers and stuff. So learned a lot about cryptocurrency and blockchain there and dabbled in it and tried to find if there was any sort of recipes for success between AI and blockchain as well. But this was back in like 2019 before the AI blockchain hype really came into fruition. After that, right, like just being in the space, I've always seen a lot of problems with user experience and adoption and scalability. And so that's kind of what prompted myself and my co-founder to start Manta. We actually met in graduate school. I was at MIT, he was at Harvard. And so we're basically neighbors. And so we collaborated a lot and started Manta right after.
I was always looking for the MIT, but maybe did not think of about it in serious. Can you share maybe one of your most exciting insights that you get from MIT?
At the time, the most interesting insight that I had was MIT students and the community was very bearish on crypto and blockchain, whereas Stanford and the West Coast was very bullish on blockchain. And I think that that sentiment is still kind of there, which I think is a little bit unfortunate because that means that a lot of the innovation goes towards the West Coast. And I wish that it would happen more at my alma mater. But at the same time, right, like I think that the mentality, right, like is a little bit different as well. I think the East Coast schools are very much focused on research and also kind of not so much on the entrepreneurship and risk-taking side as the West Coast.
What does entrepreneurship really is for you?
What does entrepreneurship mean for me? That's a really good question. When I started my first company, my mentor, who's still, a really close friend to this day, told me that you can't control what happens to a company because you can work your hardest, you can do everything right, and everything can still fall apart in front of your face. But you can control the experience that you give people during that entire journey. And so entrepreneurship, right, like many people are very much focused on purely the outcome, but people don't appreciate the experience enough. And so you can still give people a good time regardless of how the outcome is. And so for me, entrepreneurship is really about trying to impact people as much as I can.
So how many users do you have on Manta?
Users? I don't know. Wallets?
Wallets, yeah.
Probably. Yeah, so I just want to clarify that because we've been talking a lot about users versus bots, So I think probably maybe like 1 to 1.5 million right now.
Is it enough impact for you or not? I mean, for all these wallets as an entrepreneur.
I guess you're asking more so like impact from like my previous answer about entrepreneurship. When I say impact, I don't think that I am ever going to be or want to be big enough to impact people on a global scale. People will be impacted by the products and services on top of Manta, yes, but my own direct impact is towards the people that we work with, towards the partners that we make, towards the supporters that we chat with, right? Towards the community members that we talk with on DMs and all that stuff, right? I think like that's where the heaviest impact is made. because these are people that you directly touch their lives, and like you can help them in whatever way that you can.
What do you think about the number of the bots from this 1.5 million?
Oof. I've chatted with a lot of L2s, and I think consensus wise, right, like maybe people believe that in general there's like maybe 100 to 200,000 real users, of which not all of them are daily active, and the rest are probably bots.
Why is so many bots in our industry?
Because of the incentives, right? Like, I mean, it goes back to, like what the goals are here, right? And so like if a lot of the Web3 incentives are around, finance, then people will find a way to, maximize those incentives. And right now, the way of maximizing those are through bots, unfortunately.
What do you think about the current trends maybe in crypto field? What are you looking for personally right now? I know that you are 100% focused on L2, on your Manta network, but anyway, you see the big picture of the industry anyway, because as an entrepreneur, you must to look in it. So what do you see now?
I think RWAs are the next big thing. And I've always believed that, right? Like even before the whole sort of RWA craze, and I'm not talking about any specific projects, I'm not talking about the tokens, but I think RWAs fundamentally align with the true value proposition of blockchain that's already been proven, which is finance. First, transfer value, store of value with Bitcoin, and then, creating more wealth and all this other stuff. RWAs are a financial instrument or can improve existing financial instruments, which I think is something that, any traditional financial institution would love. Right. And a very simple example of this is NVIDIA. NVIDIA stock obviously went kaboom, but who can trade NVIDIA? I don't know where you live, but like, can you trade NVIDIA stock?
What do you mean trade?
Like, can you buy the NVIDIA stocks?
I think with an interactive brokers and with my UI identity card, I can.
Exactly. Oh, you've just told me a very complicated way that you may be like, yeah, I can do that. But how many other people have that same luxury? And so NVIDIA, this whole sort of whatever it is, and, like the people have been made from this and people have been broken from it, right? That's not the point. The point is who actually has access to these financial opportunities. For you and me, because we have access to this, we take it for granted. But for the rest of the world, for Southeast Asia, for developing countries, for people in Russia, for people in China, right? Like the normal average everyday person doesn't even have access to any of this. And so what would a world look like if they did have access to this, if it was tokenizable and globally accessible, tradable 24/7, right? Now, from a financial institution perspective, that's great because they have access to much deeper liquidity. They have much better global price discovery of NVIDIA stock rather than just US-centric price discovery. And so that's a great opportunity for them. And it's a great opportunity, or I wouldn't say great opportunity, right? Not financial advice, but like people who want to buy NVIDIA stock can now buy NVIDIA stock no matter where you are in the world. And so it's a win-win situation here. And you can abstract that away to not just stocks, but real estate as well, right? I'm a farmer in Iowa and I'm trying to sell my farm and I don't even know who to sell it to. I don't know where to begin. I'm going to try to sell it to this company. They're going to try to make it as cheap as possible. I might even lose money on it. What if I tokenize that? What if I give it to the world, right? What if I have now liquidity from the entire globe that might be interested in purchasing my property, right? Then I could probably find price discovery that's way better than what I originally intended. Right. And so that's a win for the farmer. That's a win for the buyers because now they have access to these types of locations. And so I think there's a lot of opportunity that RWAs unlock because it truly can globalize finance. I think RWAs would be very powerful. And it hasn't worked before in the past, right? Like I think RWAs really got its initial start with like tokenizing villas in Bali or something. Right? But like without government support, it's useless because then it's like, okay, if I want to sell my villa to you and then later say, no, it's still my villa, right? The government's not going to back a smart contract on the blockchain. But now we're starting to see governments saying, okay, let's explore RWAs. Let's see how we can legitimize this and actually back it. And so I think like it is building a lot more substance around, actually coming to fruition. So Yeah, RWAs, I think it's very cool. I think where Manta really shines is our innovation and adaptability, right? Like, and I don't mean innovation as in like, we're doing all these very detailed technical things that people don't understand, right? Our innovation is very much focused on how do we improve user experience. And so we've done a lot there. I won't go into detail on everything, and that's something that I'm really proud of because we are just one of many different L2s in this space. And if you look 5 to 10 years from now, right, we're trying our best. Every L2 is trying their best, hopefully. Maybe some L2s aren't trying their best, right? But everyone is not going to make it. Are we going to make it? I certainly hope so. But are we guaranteed to make it? Don't know. But will make it is good ideas. And so whether or not Manta or ZK Sync or Arbitrum or Optimism or all these other L2s make it or not, needless to say, the innovations that we've made for this space during this time will make it. And I really hope that modularity is something that will make it beyond Manta, because that is something that allows infrastructure businesses, infrastructure projects to build in a very agile, adaptable manner. And that's exactly what the industry needs.
Guys, we are done for today. Do what you are passionate in because you are the only person that can get it.